All right, welcome back for the episode of Carnivore Trades. Today is Friday, March 24th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, getting this video out a little bit on the later side here. Had some appointments right after the bell today, and I was watching the markets going into the weekly close here. And I didn't want to rush it because I wanted to see those closes. So kind of a mixed bag here today and really this week. Market makers just win, right? Market makers are winning right now here. And it's a tough environment here. So we have a big move down, a power reversal on Wednesday. And then kind of what I would call like a pause day on Thursday, which is normal after a big move down. I'm not ready to call this a reversal yet, but the bears definitely gave up some ground here. And what I mean by that is I want to show you the weekly close here on the spiders. You're going to see that we closed at 395.75, and the 50 moving average on the weekly is 395.67. That's not a coincidence. So that yes, it's only 7 or 8 cents, but that's not a coincidence that that was closed above. They don't make mistakes when they do these things here. And if you want to confirm it with the SPX, 39.70.99, and the 50 there is 39.66. Now they did defend the 20 on both time frames, or on both vehicles. Additionally, if we just clean this up here, what do we see? Well, you still have an inside bar on the weekly. So that is still going to be a good amount of resistance here. And you can trade inside of that and still have a bear bias for a move lower. Right now, though, definitely a little bit of I would say more neutral. Now, we did close the week back below this trend line as well. So there's another kind of point for the bears. If we take a look on the intraday, though, for me, for the bears, I would have rather you kind of showed up here towards the end of the day. You had a nice rising wedge. They had a really good setup here on the spiders intraday. You can even see the same thing really on the Qs, kind of like right there. Oops, there we go. And they had a good chance to, that's as good a pattern as any, right? That's a good pattern here. If we look on the hourly, that's a bear wedge, right? That's a bear wedge. A down move and then just kind of a steep rising wedge inside of that. Could that play out Monday? I would not be shocked at all. In this market here, it wouldn't shock me to see us go back down to 390 on Monday and close down there. And you could make a case that in the next, let's say we, retrace a little bit, you could have a bear flag. So you have a big down move, and now you're just inside of this red bar, which is also inside of the weekly red bar. So there's definitely a lot of options here for us to still trade down. Yesterday I talked about us trading down to 385, maybe a little bit lower if we, depending on what it looks like. If we get more velocity, more news, you can always overshoot. That's still a possibility. Again, the weekly time frame saying that is a possibility. It is a small win for bulls, though, that we got above that 50-week moving average on a closing basis. Right now, what's the reasoning? To me, there's just too many shorts in the market, and that's why it's making it, not even just shorts, but hedges, and that's what's making it hard for the market to sell off. So it's really just that simple, I think. So that's just the nature of bear markets. They make it, and it's not like the bulls are doing great either. We're down, from 417, and we got all the way down to 380 a week or two ago, so in a month and a half, that's a lot of real estate there. And, we've had a nice little rally here, but it's not like the bulls are winning either. It's like that old saying, bear markets make fools out of both bulls and bears. And that's playing out. Market makers they're throwing a party right now, I'm sure, but that's about it. So right now, a little bit neutral. I would still keep the door open for a move down to this area, but right now resistance for bulls right now, you got to get above this pivot. So 402.49, if you get above that, then you can trade higher. You'll have a lot of resistance up at 410, 412, but again, you got a lot of work to do getting above this pivot first. And again, like I said, we had nice price action today for bulls. You had a little gap down, and little pullback, and then it's almost like a buy program really all day long. Look at how just tight the range was. Just kind of chugging up. So you had nice price action, but I mean, we could easily, if we just have a retrace on Monday, this is a bear flag starting to form. So again, I would just be neutral here. Ultimately, I believe the markets are going lower. That hasn't changed. But in the near term, it's a little cloudier. So anyways, let's get over to the Qs here. So again, we talked about that little rising wedge. Let me clear this up on that intraday. But again, basically the same chart. Still inside of that reversal. Qs are still holding up. I will note, though, that today specifically, outside of like Microsoft was strong and Apple was kind of strong towards the end of the day. The Qs were on the weaker side, definitely. For the first time in a while. So if you see the Qs here up 37 basis points at the end of the day, Spider's up 66, so 0.2%. Qs lagging. Why was that? Let's look at their semis, our favorite here, down 1.58% in an up tape. This is definitely not bullish. So that's definitely a point for the bears there. Take a look at the price action here. Down move and then inside bar all day long. So this is what else leads me to believe that we could push down Monday. If the semis are down, the market's likely going to be down. And one of the lead generals today for the market, NVIDIA, was up nicely, or excuse me, was down nicely, which has been, a powerhouse lately. So, is it money rotation? It's possible. The only thing, the things that were up the most today that I can see were like healthcare, industrials, mats. XLE was kind of flattish here, but it's not like I wouldn't say this was a bullish tape as far as like certain sectors and certain stocks leading that you want to see in a bullish tape. Like I said, it was like, XLI, XLB, and XLV here, almost kind of like a risk off play. The diamond here was up 46 basis points. So again, just noteworthy. But the Qs, again, they're holding up right now. We'll give them the benefit of the doubt. Still has resistance at this pivot. If this consolidates, though, this can go to 320. That is the next level there on the triple Qs. But it was noteworthy that, specifically the semis were down today. There's cloud software. Let's actually talk about the Russell first. The Russell did get a nice bounce. So up almost 1% on the day. KRE up 3%. Yellen met with some regulators in government today. Markets like that. So when leaders panic, markets stop panicking, right? That's the saying. KRE up nicely. Possible little W bottom there. So we'll watch that. It needs to have follow through. I mean, this isn't far from out of the woods here. Again, even if that does happen, I don't expect a ton of upside. But, KRE holding up okay. And obviously that helps out the Russell. A lot of regionals in there. Again, we talked about this area. It tried to bear flag, and we got through this pivot. And, it lasted for, a day. But there's still a lot of demand down here, right? This is the October lows. We're not that far away, right? So if there's anywhere it's going to get defended, it's here. If this is going to break down, you're probably going to need to come up and make lower highs first, because this is not going to just break on the first hit. So just 2 weeks of consolidation is going to be enough to break that. But the Russell got a bid. That did help out the market. Is it money rotation? Money possibly rotating into KRE and out of tech finally? Did I talk about that on Monday? Yes, I did. So we'll see. Again, I'm not expecting, when I say money rotation, I don't mean like in long term. I mean like short term. I'm not saying go out and buy regional banks right now, but just kind of near term trends. Anyways, let's get over to the IGV. Well, we already mentioned the semis. Let's just talk about it really quickly. Again, I don't see a lot of upside here. By the way, there's a big rising wedge here on the SMH that we're keeping an eye on now. But as far as horizontal, you guys know we're into that 618, and this is major. So I don't see a lot of upside in the semis. Again, if the market's going to rally here, it's probably going to have to come from the banks or come from some other sector here, because I don't see a lot of upside here in semiconductors and big tech. A lot of these names. Apple did hit my 160 area. That's kind of maxed out if you ask me. I don't see a lot of upside in Meta. I think Microsoft is a short. Or will be a short soon. I mean, it's holding up right now, but this is really, there's a wall of resistance up here. We've talked about NVIDIA before, but in any case, that's my take on the SMH. Again, watch that rising wedge as well. and that's tightening up now. So anyways, over to cloud here. Again, cloud holding up, still inside of that reversal bar from Wednesday, but it's hanging in there. Again, if this goes sideways, can it go back up to 300? It's possible. I can't rule that out. You got a gap fill at 297.26 as well. So that could be a shorter term area. And there's also the gap right there at 295.43 that never quite got filled. But cloud kind of on the neutral side here. It's holding up okay, so we'll respect it. Weaker name, transports. So still on the weaker side, up 14 basis points here. It did come down and tag this level. So let's look at that. That's a weekly level, right? That was that previous green bar that failed. And you end up getting a blow off top anyway. So sometimes those failed patterns unfail, I guess. But that's where it went. That was support previously, and you got a bid off of that. It was consolidating here for a move lower, but again, when you have, there's a lot of demand here, a lot of demand. Typically, you're not going to break through that in 1 week, just kind of like how we looked at the Russell there. You need to do more backing and filling. You need to come up and put in a lower high. You need to bear a flag longer for that to happen. But that said, still a weak chart. Not a good look here on the weekly. You know, if this consolidates sideways, this is going to go much lower. So be careful with the transports here. I'm not a fan of what they're doing right now. They need to get back above 14,139, really on a weekly close, honestly, for me to even give them any sort of upside bias right now. But anyways, over to rates here. ZT getting a bid. So the 2-year, again, higher highs there. Still going into a wall. Again, I just don't see a ton of upside here on bonds right now. There's the ZN, the 10-year. You know, it did close the week above the 50 MA, and the 30-year did close above that. There's just not, I mean, you're going into a lot here. And yeah, you're consolidating a little bit, but to me, there's just not a lot of upside right now. We'll see what we get next week. You know, it is trying to consolidate. If it does more of it, then it can push higher. But right now, I'm not in love with what I'm seeing on bonds. So again, we'll take it 1 week at a time here. Anyways, over to housing, XHB. Again, higher, basically basically flat there. So up just 3 pennies. Again, I don't like the pattern here either. Down move, sideways consolidation. IGB, down move, sideways consolidation, same thing. And the VNQ finally getting a bid here. So this is why I've been saying, like, hey, it's starting to get down into support here. It's weak. You're into this pivot though, but you're into the October lows now, you know, essentially. You're into that zone now. And it should get some type of reversal at some point. So up 2.5%. Not quite an engulfing reversal, but pretty good power move there. So if that gets going, that can test 80. We'll just call it 80.75, and then possibly that 20 moving average. The bigger level here is 84 though for the VNQ. All right, over to XLF. Again, same thing. You know, that kind of choppy bear flag, not mature enough. And what happens when a pattern tries to break out that isn't mature enough? Usually it fails. So it came off the lows, still finished down 2 cents. What a dog, right? But it could, you know, it did come nicely off the lows. You got a good tail candle there, good reversal again into the October lows as well. You're not going to take that out in a straight shot, most likely, at least not on an ETF. You know, certain stocks, SBNY, stuff like that, those individual names that are going bankrupt can take that out, but not the whole ETF. This has Berkshire in it. It's got JP Morgan in it. So, but either way, if this gets going, resistance is up here at 32.25. And that's really all you need to know right now. XBD also coming off the lows here. Nice little tail candle there. Again, this could still be a bear flag though, so be careful with those broker dealers. Crude fractionally lower here, down just 76 cents. But it did come nicely off the lows. So, you know, if this pattern goes sideways here and we flag up, this can have like an ABC up. After that, I think it's about done. But we'll see what we get here. I'm not in a hurry to do anything with it right now. 72.25 is still resistance. And then, of course, this big trend line going all the way back to 2021, that will be resistance there. You could make a case that's a head and shoulders too. I don't think that plays out because that would take you basically back to $10. But, and I don't think we have anywhere near that far to go here on crude. But either way, Basically just kind of a neutral day, a little test candle. So we'll give it the upside bias for now if it can hold up, and maybe put in a little ABC pattern after that. I think it's done. XLE getting a nice bid off the lows. Again, kind of a tail candle. They're defending this trend line for now. Again, upside is that 82.75 handle. So we'll watch for that. XOP, same thing. 20 moving average and we'll just call it 130 area. That's your resistance on the daily. OIH finally got down there. 250, what's close enough? 250.69, right? So been calling for that for months now. And it finally got there. So, what can you say? You got like an outside move here. It's almost like you got a big, wide broadening pattern here. So if we look at it like that. So we'll see. Maybe this can get up to, 280 again. Your 20 moving average, you're still pretty extended from that. This actually might be a sleeper long play here. Next week even, you could just put your stop below 250. If it takes it out, it takes it out. But, that could get you up to 280. And at the very least, that 200 moving average. So we'll watch OIH next week. But finally got down to that level. Again, it's probably due for a bounce here. But yeah, I'm not in love with energy right now, at least not in kind of like the medium to near term. And then in the near term, it's fine, but longer term, I wanted to get it lower. Anyways, over to Nat Gas here. So Nat Gas, I'm watching this falling wedge too. That's a different chart I've got on there, but notice so I'm looking at a 4-hour here, and that 4-hour 20 moving average has been resistance here. And notice how we're kind of starting to curl up with higher lows, a possible little rounded bottom there. Every time it gets to that 4-hour 20 MA, though, they whack it down. And this is how, people would say the technical analysis doesn't work. I don't know what to tell you, because that 4-hour 20 moving average, right, that's clearly resistance, right? It's clear as day. Every time it gets up there, it gets rejected. What happens at 1 o'clock on Nat Gas, the 4-hour close? 2:40 p.m., 250, there's a gap out of nowhere in Nat Gas futures on a 10-minute chart, and an uptick in sell volume. So you're going to tell me that there wasn't a computer program sitting there waiting to knock that off of that 4-hour close? They were bidding it up. Look at this. They were bidding it up, and it was ready to make a higher high. And right before that 4-hour close hit, somebody came in and whacked it down, because they know that level, if Nat Gas gets above that, then it's up to 235, 250, and you break out of this falling wedge. So that's what I'm watching there. Watch that 4-hour pattern into next week on Natty. But I love charts for that reason. They tell you so much if you know what to look for. Anyways, over to the DXY. So dollar index losing that weekly inside bar. I figured that would happen yesterday after the pretty good sell-off. So right now, my bias here is probably to double bottom. So near term, a little bit bearish on the dollar. Can it get a bid up, kind of like a zigzag up? Yes, absolutely. But I ultimately think it wants to go back and test this level, maybe even down to the 150 level, slight pierce of double bottom, in which case you'd have a potential setup, for a W. So that's what I'm kind of expecting right now. That's what I've got penciled in. But we'll see. We'll take it one day at a time. But dollar index did lose that weekly inside bar, so we'll give it kind of more of a bear bias here over the next week or so. Gold here, GC reversing nicely after hitting 2,000 again today. This chart's nothing wrong with it. It's a little overbought and extended. The only issue I have with gold right now is it's up on fear, right? It's not up on fundamentals. Why do I know that? Because GDX is closer to 52-week lows than it is to 52-week highs. And the same thing with silver here. Silver is, having a nice bid. We got up to 23.50 finally. It pulled back, so that's where it went. But you look at SIL, SILJ, these aren't far off the lows here. So right now, gold's getting a fear bid. If fear gets alleviated, this is going to come down. So that's what I'm watching here. Again, you guys know the level, 1962.50. That on a monthly close, that's the level I'm watching. If we're below that, then I think I'm going to have more of a bear bias. If we're above it, then we'll see. We'll kind of reevaluate things. But for right now, gold just pulling back here. Silver still green on the day, but 23.50, that resistance worked out pretty well. Could trade up to 24. Commodities always tend to overshoot, as we all are aware of. Platinum here, still a daily chart inside bar. If this is going to get going, it probably needs to do it next week. I'd like to see it firm up a little bit more. right now, we'll give it the upside bias if it can push to 1040. That's really all I see right now. If this fails and you close it below 960 spot 40, you're back down to 920. So just be careful with platinum. I'm not in love with it at the moment. I will like it when it tells me to get in, but that's not right now. It will be later this year. Copper also pulling back off the highs. You guys know I'm not looking for copper to do anything right now except retest 375. All right, over to Bitcoin. So there's our DX futures there. So Bitcoin pulling back a little bit off the highs again. It'll be interesting to see what they do with it over the weekend. It's still holding up though. I mean, you have a nice inside bar here at the highs. You got through this trend line. It's kind of choppy and sloppy. Not even sure I love this trend line anymore, but as long as it's above 26,926, it's holding up. So we'll give it the benefit of the doubt. You can make a case it's flagging, but just be aware there's a lot of resistance up there. So here's a good example here. Let's do this again. Was this enough consolidation to get through this area? Was this enough consolidation to get through the October lows? Was 1 week of consolidation enough to get through this big area? Obviously, the answer is no. Okay, so let's look at Bitcoin. We've been consolidating for not even a week. And this level on Bitcoin, and I know everybody thinks we're going to 40,000, but this level on Bitcoin, that's 5 weeks of resistance there on a level that took 3, 6, 9 weeks to break out of that bear flag. There's a lot of supply. A lot of people bought this dip and they're underwater on that. They're going to turn into sellers when it gets up there. So my guess is it needs more. That's just what the probabilities say. I mean, could it shoot higher? There's nothing to say it can't. Bitcoin does crazy things, but right now probabilities dictate that this area is going to be resistance. And I've surmised before that 30,000 needs to get pierced in order to get the max amount of bulls on board. Because if you get 30,000 pierced, everybody in them, it's going to be all over Twitter, CNBC, Bitcoin's going back to the high. That's when you want to be a seller. That's when I want to be careful with it. But anyways, so back over here to the spiders. Kind of a neutral tape Friday. Bulls definitely gaining some ground here. Getting above that 50-week moving average, that's important. But that weekly inside bar, that's still resistance until proven otherwise. And also, don't ignore those semis. If they start getting weak here, that's going to be a clue for this market. Anyways, guys, going to wrap it up here. You guys have a great weekend. Come find me at carnivoretrades.com. Talk to you guys all next week.